Howdy folks, welcome to the Daily Coin. My name is Rory and today is Friday, July the 21st, 2017. I have the very distinct honor and great pleasure of welcoming to the show for the first time Miss Lynette Zang. And Miss Zang is the Chief Market Analyst at ITM Trading, which was founded in 1995. And Lynette has worked with ITM Trading since 2002. And since 1964, Ms. Zang has studied and worked in the markets as a collector, a banker, and a stockbroker. Lynette, welcome to the Daily Coin.
Well, thank you very much. It's really a pleasure to be here.
Well, I'm glad that you're here. And you published an article way back in October of 2016 titled Meet the SDR, the New World Reserve Money. And this is a subject that's near and dear to my heart, which is why I like to keep an eye on what's happening with it. But everything's kind of changed in the direction that it was heading, with the cryptocurrencies kind of blowing into the space. And there's been some very significant changes to global currencies, as I'm sure you're well aware, with the cryptocurrencies, more specifically gold-backed cryptocurrencies bursting onto the scene. With gold-backed cryptocurrencies coming into full view, from your perspective, Lynette, what role will the SDR play, if any, as the Federal Reserve note continues to lose its world reserve currency status? I mean, do you see a melding of the blockchain technology with the SDR, or what are your views regarding the potential of these two methods of global trade settlement working together? Are they going to be competing, or one simply losing to the other?
Well, for one thing, central bankers will not give up their money monopoly easily.
No.
So I'm pretty sure that they will not allow these cryptocurrencies to take over that role. Having said that, it was back in 2015 when the IMF brought up the fact of taking us cashless so that they could take us below zero. So the cryptocurrencies really support that goal. And there's no doubt in my mind that the reason why you're seeing this huge proliferation right now is because it serves the central bank's purpose to allow everybody to get comfortable holding all of their wealth in that arena. And let us not forget about the fact that that blockchain technology holds all of an individual's information in one easily accessible location. So there is no doubt in my mind that it will be that blockchain technology which is easy to control. Even though people think right now it's decentralized, I believe that the IMF will absolutely centralize it. And I also believe that it will have a smart contract overlay, which is a self-executing contract. So that's what we're going to be working for.
Okay. See, I personally see the cryptocurrencies in what sounds like the same light that you do, Lynette. And Catherine Austin Fitts seems to believe that they're just laying the groundwork for the cashless society. They're building the model, and that's what I see as well. If you go all the way back to Christ at the temple, why was he so upset and destroyed all the money, all the merchants that were out in front of the temple? Because they were exchanging coins in order to satisfy the temple, because the temple only accepted a particular type of coin. It's never changed since. There is no such thing as competing currencies. Doesn't happen. They will never allow it to happen. There's your history right there. Or am I wrong?
Well, no, you're right about that. But, I think one of the things that creates a challenge for most people to understand this is because we are not really taught. They don't want us to understand what the real function of money is. So that's something that I like to talk about because it's not really very complicated. but they needed a tool to value labor and then store any excess labor that you didn't need to use today for use in the future. And the goal was for it to have the same level of purchasing power so that whenever you needed to access that excess labor, well, you were still getting paid the same amount. So that's what gold, they tried many, many things over the years. And the reason why gold evolved as the primary currency metal, silver the secondary, is because gold is recoverable. It's indestructible. And it's finite and it's divisible. So it was a good tool and many other things. But it's labor based. It takes labor and energy to pull physical gold out of the ground and then mine it and all of that. So it was a fair way to value labor for labor. On the other side of that, it was hard to tax you without you knowing it. And so that's really how it convoluted into fiat money, and the literal translation of fiat is by decree. So this is government legalized money. And as we've seen last November in India, if a government says, oh, this is money, they can also say, oh, no longer money, you got 4 hours, and that's it.
Exactly.
You know, so that is a really, for me, that's where you need to understand that history part, because every government has done that. They start out with a good money standard, and then they denigrate it and convolute it until it has zero value and it's just based on confidence. And then ultimately, people lose confidence, and then ultimately, they have to go to a gold back. So with the SDR being in digital form, and even you mentioned the gold cryptocurrencies.
Right.
Okay, so I've done a little bit of research on that, and I know the CME group is coming out with one, but it is my understanding, and I could be wrong about this because I couldn't find the bottom line documentation, but only the ones that follow Sharia law would be convertible into gold. And I think it's 1 gram gold is an ICO that's out, and I think it's going to be closing soon. But that you presumably can convert into gold. The one that's coming out or from the CME group and probably from a bunch of others is fiat. It's not real. You can't convert into gold. And cryptocurrencies are not real. They're a mathematical formula. They're an algorithm.
Right. Now, you do have, there's Zen Gold, which is gold back. They have physical gold as well. And 1 gram, as you stated, that is Sharia law compliant. So, I mean, it fits everything that Sharia law says, and that was built specifically for the Muslim world. And I'm not sure if the ICO, I'm not sure if the ICO is closed at this point, but I know that it is out in the market. Zen Gold, which I paid very close attention to, because you could trade. They would accept Bitcoin or Ethereum for the Zen Gold tokens. And
well, great. It's the Zen Gold. Can you convert that into physical gold if you want to?
Yes.
Yes. Okay.
Yes, you can. And they had 100 million tokens at 1 gram each, just like the 1 gram cryptocurrency. And they sold, the ICO was closed in like a few hours. I mean, they sold everything out, and they brought 63 million of the 100 million to market, and they were all gone. And I was watching it because I wanted to see what happened with the Bitcoin and Ethereum markets, and both of those coins both dipped dramatically the day that that ICO came to market, which means that people were in fact taking their Bitcoin, or I don't know this to be 100%, but it makes sense. They were converting some of their Bitcoins and some of their Ethereum into Zen Gold. And because most of it has been proven that all of the rise in the cryptocurrencies is coming out of South Korea and one other country. I mean, it's like 48% of all of it is coming, of the rise has come from one or two countries in the Asian Rim area. So, I mean, it's anyway.
But it still is, I know there's a theory, but it still is ether. It is still not tangible. It is not real. And, you can hold it in a wallet offline. And if you're going to do it, that's definitely the way to go. But it can still be hacked and you can still lose your ability to use it.
There you go.
And central banks can make it illegal. I mean, they can do anything they want.
Right.
Exactly.
That's why I like gold and silver in my hand.
Voila.
lot harder to get to it.
Exactly. And there's not, there's not enough of it to make it worth their while in this country anyway. Now, that's not true in India, but in this country anyway, to go knocking on your door.
Right.
So it is this, and you can always convert it.
Exactly. And Lynette, if you would, just give us a brief overview of ITM trading and your role and what the company does.
Mm-hmm. Well, as you mentioned, I'm chief market analyst here, and I've been here since 2002. And what really makes us different, I've been studying currency since 1987, and it's easy to see repeatable patterns when you look at 4,800 currencies, fiat currencies, that do not exist. So we developed a strategy based upon those repeatable patterns in movement and valuation. And we really consult with our clients, establishing what their goals are, what they're trying to, and really what their circumstances are, what they have to work with. And then we help them create a strategy that works through the trend cycle.
Okay.
So that's what we do here. We work together as a team. So I oversee all of the strategies that are built, and everybody has access to me, through the brokers, because we all work together as a team. But there's lots of smart people here too, and everybody kind of will focus in different areas as well, and then bring that knowledge together.
I like it. I like it when people come together and you have a much larger pool of knowledge, which makes it a lot better, and for everybody wins, which is what we want.
And creating community.
Yes. Because
in reality, I don't really want to go work for a smart contract controlled by a corporation or a central bank. I don't want that. I may not have that choice, but if we all come together and we all make a stand and say no, well, there are more of us than there are of them.
Exactly.
If we don't, if we act as individuals, well, then they're going to do whatever they want, just like they've done, because they know how to do this.
Right. That's exactly right. And thank you for that. And China and Russia, I'm sure you keep a very close eye on what they have going on, and they have been officially acquiring gold for their respective central banks. We have the following alliances that both of these economic powerhouse nations either lead or play a vital role, like the BRICS, the EEU, the SCO, the Belt and Road Initiative, the North-South Corridor. I mean, the list just goes on and on. I mean, and these are economic and security multipliers that could very easily blow the US, the UK, all of Europe, economically could blow them back into the economic Stone Age. I mean, you have all of these nations being tied together by economic and security agreements. I mean, and according to your analysis, Lynette, I mean, what role will gold play in this region, or perhaps even the world, and how will the West be able to compete?
Well, I having dug into this stuff as much as I have, what seems like a conflict or what seems like a coincidence, I find is typically not. And I also see that historically there's always power shifts. just like the power shifted from Great Britain as the world reserve currency to the US. So now the power is shifting to China and their alliance with Russia. But make no mistake, it was really Russia that started the shift back in 2005, because as the world reserve currency, all assets and instruments were valued in dollars. So everybody needed to use dollars to buy stuff if they were going outside of their borders. But Russia came out in, I believe it was April of 2005, and said, no, we will no longer value our assets in terms of dollars. From here forward, it will be rubles, euros, or gold. Now, that gold piece is really significant, because the most important function of gold is to hold that value, like we talked about. And so, I have to say, definitely there's an allegiance, but we had to agree to the power shift, at least at the IMF level, because we held the lion's share of votes.
Right.
And that shifted on December 31st. But they've been working toward that shift. So quite honestly, I think that we understood that we couldn't retain this position because we couldn't support it anymore. And so we agreed to the power shift. Pardon?
I'm sorry to interrupt you, but I know that the U.S. had sole veto power at the IMF, but when China came on board with the yuan renminbi into the basket of currencies, that took some of the voting power away from the U.S., but it still left them in the driver's seat as far as being able to veto. Solely the veto power was in their hand. And
correct.
And you said that changed on December 31st. Did they
at
cross
midnight?
The line?
Yes.
Okay.
Yes. We crossed the line.
I did not know that.
And in order for the Chinese yuan to be included in that basket, they changed the parameters, and we had to agree to that. Even though we had full veto power, we had to agree to that, or we couldn't have done it because we had that much power.
Right.
And, when you look at the SDR, remember, the SDR was created in 1969 to take over as the world reserve currency as the U.S. was, funding the war, the Vietnam War, and exporting inflation around the world. And there was a run on the dollar at that time where countries were sending in dollars and pulling the gold out of our system.
Right.
So you have to understand that SDR mechanism has been in place since 1969. But other than the originally it was based on gold, and then when we went off the gold standard, when Nixon disconnected, made that disconnection, or default is what it really was.
Yes.
Okay. Then it was a basket of 16 currencies, and then in the early 80s, it whittled down to just, I believe it was 5.
Right.
And then Germany, there was Germany and I think France in there. And then when the euro came in, then it's been 4. So basically, there's been no change in the SDR basket since the early 80s to speak of, up until last October.
Right.
And there were a lot of hoops that China jumped through by opening up their markets and setting up the banks. And so their job was to spearhead introducing the SDR to the world through the first SDR denominated debt. Now there's actually a lot of blockchain debt coming out, and there's, can't hold me to that because I have some research to do on it this weekend, but it appears that there is an SDR blockchain or coin that has just recently come out in China. So somebody sent this to me yesterday, and so I did like a little overview, and then there's somebody in our office that really kind of focuses in that area. So I gave it to him to do more research, and then I'm going to look at everything this weekend. So I'll probably be being more intelligent about it next week.
Now
Please bear with me.
Now there's already a central bank coin, crypto coin, called the utility settlement coin, and that was developed by some of the really good guys within the banking industry, like Citi and Santander and Bank New York Mellon. You know, these really loving people. But anyway, there were a couple other people. So they've already got cryptocurrency at the central bank level. So they can make any changes that they want at this point at any time. I had not heard about, I know that China was looking at the cryptocurrencies and the blockchain, and Putin actually met with the developer of Ethereum about 4 weeks ago, to explore how they can bring the energy contracts online through utilizing the Ethereum blockchain. So it's quite obvious that these guys are already in there. The IMF is looking at the blockchain. The United Nations is looking at the blockchain. And when I read that, that's when it was like, okay, this is it.
Right. The World Economic Forum.
Right.
You know, I mean, they sat there, and so you had everybody there. You had all the guys, all the big players, and they've been dumping billions and probably even trillions into this technology. And I think the only thing that's buying us a titch of time is the number of transactions per minute that can be concluded or conducted on this blockchain technology.
Right.
So that's really the area that buys us a little bit of time, I think.
We'll see.
But yeah, they're all working on it furiously. And my bet is we'll have a US dollar coin, because the way that they make these transitions from the gold standard to a partial gold fiat, they kept the name the same, the dollar. In 1971, when we were on the partial gold standard and we went to a debt standard, well, if you had $1 in your pocket in July of 1971 and you had $1, it could have even been the same dollar, but the new dollars didn't look a whole lot different. In September of 1971, well, you know, we still had the dollar, so nobody knew that anything had changed, when in all of those cases, everything had changed.
Yes.
So my bet is, I know that there is a Fed coin, but I don't think it's going to be a Fed coin. I think it's going to be a dollar coin, because they don't want people to understand that it's different, right? That it's, even though it will be.
Yes, and that makes perfect sense. But this utility settlement coin trades at parity with the dollar, the British pound, the euro, the yen, and the franc. All of them, one USC, one utility settlement coin, is equal to $1, 1 pound, 1 franc, 1 yen, 1 euro. Across the board. So it's already...
I'm going to have to look at that, because that, you know, in the floating exchange rate.
Yep.
That's I'm going to have to look at that.
I'll send you a link to the article that I wrote about it about a year ago, because this was, when I read this, it was just like, oh my God, it was terrifying.
Well, you know, okay, because part of what's happening is that the peg system to the currencies is breaking down. It was the Swiss currency in January of 2015 that ushered in this breakdown. So yeah, I definitely want to look at that to see how that all fits. And I was not familiar with that. So thank you for bringing that to my attention, because I'm trying to understand all of this. As we all are.
As we all are, because I mean, most of us are just not familiar with it. We knew that it was out there, but we didn't pay any attention to it because it's a gaming token, you know. And now all of a sudden, it's not a gaming token anymore.
Right. Well, you know, the funny thing is people think that if they don't see it, you know, they think that ignorance is bliss. Well, ignorance does not make you immune. It just leaves you vulnerable.
And ignorant.
And right, exactly.
Oh, and I want to shift gears a little bit. And will Trump, from what you can tell, Lynette, will Trump be able to overcome the roadblocks of his agenda? I mean, like the tax cuts. I mean, he just lost Obamacare, the repeal of Obamacare due to this do nothing Congress. And will he be able to implement policies to encourage manufacture? I mean, how does he overcome these roadblocks and reset the agenda that he laid out in his campaign?
Well, since in all of my studies, it is never as things really appear. And in my personal opinion, I'm pretty sure that President Trump had a pretty good idea of what he was getting into, and they need inflation. Every single time a central banker opens their mouth, they talk about the inflation. So I think that something closed door meetings will take place. And yes, I think he's probably going to get that agenda. I think he's probably going to repatriate all of that money that's held overseas. I don't think it's going to create the inflation that they're intending, because this would not be the first time that all that money has been allowed to come back in at a tax advantaged way. And in the past, I'm just waiting for that to happen. I will definitely do a thing on it. But in the past, it's gone towards stock buybacks and all of that kind of thing, special dividends. So it hasn't really been quote unquote, stimulative to the economy. But yes, I think he's going to get that through, and infrastructure and banking deregulation. Yeah, I think he'll be able to get those through. But I think that there'll be some kind of closed door meetings. And then I think you'll see a noticeable shift allowing that policy.
Now, when you said banking deregulation, when I hear those two words together, kind of sends a chill down my spine, because that's part of that is one of the main reasons that we are suffering through this nightmare that we currently have for an economy and financial system and all of it. I mean, are you suggesting that he's going to allow these criminals to even more power?
Yep. Well, he's saying it, so it's not that I'm suggesting it. But, a big problem, see, in 97, okay, understand that we are on a debt-based system. So it's based upon never-ending compounding debt.
Right.
But in 97, we hit peak debt. Now, look, this is from the Federal Reserve's data. This is not my data. This is their data. So I'm pretty sure they knew it too. And then there are a lot of things that shifted in the mid-90s. But one thing that happened was long-term capital management. The most brilliant guys in the room created speculative derivatives. Now, in general, derivatives have been around forever. So, and they'll call them an insurance policy, and this is why. Because if I'm a farmer and I'm growing a crop, and I'm going to sell the crop in September and it's January, I don't know what the weather is going to be like. I don't know what the market price is going to be like. So I don't know if I'm going to be able to survive another season. But if I take on a derivative against my crop, what that guarantees me is that come September when I have to deliver it, okay, if there's been a drought and I have no crop, at least I'm going to get back the money so I can stay in business. You see what I'm saying?
Yes.
Now, if everything is fine by September, then that derivative contract was just a cost of insurance in doing business. So no problem. So derivatives have been around forever, and there is a legitimate use for them. But once they saw that you couldn't keep creating that inflation and quote unquote, stimulating the economy via debt, then they needed to inject a lot of leverage And that's really when they had this huge ramp up. You can see it very clearly in the Office of the Comptroller of the Currencies. Every quarter, they publish a report on derivatives in the FDIC, insured banking system. Go take a look at it, OCC, derivative report. But you'll see this you'll see a little line on the bottom that shows you the insurance derivatives, the end users, like the farmers, right?
Right.
And then there's a little line above that, and they show you where it peaked and then fell in the mortgage derivatives. And then there's this huge monster above it on all pure speculation.
And that's where the problem is.
Exactly. Because once a derivative's created, it doesn't go away. So we still have all those legacy derivatives, and there's no market for them, though a lot of them are in the central bank balance sheet now.
They got to be somewhere.
Well, yeah. But that's what's going to implode the whole system, and that's what they're getting ready for in that money standard shift.
I think we've known for some time that derivatives are the problem, and that they are. I think that that's what happened in 2008, is that derivatives were getting away from them, and they were only able to save the system, if you will, by killing the Lehman Brothers and AIG, and then injecting, 27 trillion, according to Catherine Austin Fitts, $27 trillion into these other banks to put the fire out that was getting away from them. That's what I see anyway. And I think that we already know that the only reason that Greece mattered at all, and continues to matter, is because of their derivatives exposure to Deutsche Bank and the ECB, period. Otherwise, as Mr. Varoufakis has pointed out, what do we care about Greece? It's a small country. It's a tiny GDP. They don't matter. They shouldn't matter to anybody outside of Greece, but they matter a lot because they are the canary in the coal mine. So, but you also mentioned corporate stock buybacks. And I've been saying for some time, Lynette, that corporate stock buybacks are a serious problem. And as these companies continue to cannibalize themselves, what do you see as being the implications of these actions to the overall economy? Because they got to be getting to the end.
Well, we are near the end, and that goes back to the patterns that I was talking about earlier. So prior to a market crash, a market implosion, you will see a lot of insiders taking their chips off the table, selling stocks. And anybody can go in, pick any stock you want, just Google whatever that stock is, insider trading, NASDAQ, and that's where I pull all those beautiful bar charts so you can see what the insiders are doing. But they don't want you to know that that's what's happening. So corporations are taking on a tremendous amount of debt and converting that into buying the shares of stock back so that it looks like their earnings per share are going up, and then that pushes the stock up. So you as an individual looking at the market go, well, look at this, my Amazon is doing great.
Yay,
yeah, go ahead and look at Amazon. Right, well, go ahead and look on the NASDAQ site, and I don't know what that number is off the top of my head, but I think it's something for every $1 in buys, there's something like $1,200 worth of selling.
Oh, my
and this
goodness.
Is from, right, I mean, it's ridiculous. I do this every week. I do a insider trading corner. But, so those that are left holding the equities, I don't know, pension plans, right, mutual funds, the individual human being that opens their statement and say, everything must be dandy, look at this, right? But there's no liquidity. Now, on the other side of this market, so I want to go back to a statement that you said that they saved the system in 2008. They did not save the system in 2008. They put it on life support, okay?
And just
and
barely.
They needed to buy time, yes. There's so many things in that, but they needed. There's so. I mean, say one word, and there's about 1,000 directions you could go in. But they needed to buy time so that those at the top could pull as much wealth for themselves out of the system. Hence the banking deregulations that are coming, and the allowance of all that overseas money to come back here. But they needed to buy time so that you did not equate what happened in 2008 to what's going to happen at some point very soon. But also in 2008, if you look at interbank lending, you'll see that banks no longer trusted each other.
Right.
And with all of these shifts, all of the banks that had the job market making going in when a stock market or a bond market was imploding and buying up those shares to create a bottom, a floor under the price. Well, guess what? They're down last time I checked, 75% on the stock market and 70% in the municipal bond market. And I just did that one like a week or so ago. And according to the Treasury Department, sure, there's lots of liquidity when they first issue government debt because of all the quantitative easing.
Right.
But there's no liquidity on the secondary market. So all of this crap is being put into pension plans, mutual. You know, when you're going to declare bankruptcy, if you get a credit card, what do? Right? You go
run it up.
That's what they're doing.
Right. Well, and I want to be clear about the statement that I made about saving the system. I know they weren't saving the system. I know that it was merely a Band-Aid, but if they hadn't have injected the 27 trillion, it would have blown up. It would have blown right apart. I mean,
exactly.
and it's barely holding on by a thread, as you and I both know. And you did it again. You mentioned pensions. And this is last question for you, Lynette.
I focus a lot on pensions.
Yes, issue. They're huge. It's huge because there's. Go ahead.
No, you go ahead. Ask your question.
Well, the pensions are saturated with these problems like Amazon that you were just pointing out. And the pensions at the state, the local, corporate, they're all underfunded, all underperforming, and all unable to pay. What is on the horizon? And Lynette, how are you handling your retirement funds? I mean, what are you doing? A good question. What are you doing specifically to avoid this? I mean, I feel like that the trigger's already been pushed. It's just the cloud hasn't arrived yet. Right.
And that's a great question. But yes, you've got 6,100 people in this country turning 65 every day. And all of those plans, as you mentioned, are severely underfunded. You've got a lot of plans that are reducing their benefits, given over to the PBGC, the Pension Benefit Guaranty Corporation, which themselves said that they're looking at $248 billion. I could be off a little bit in underfunding, and the solution in 2014 was to pass a law that, number one, allowed corporations to underfund their underfunded plans more, and number two, disallow any union members from taking legal action when the benefits that they've paid for their whole lives would be cut. Okay, so the choice that I personally made was to take a distribution. I had a SEP IRA. I didn't have a pension, but I had a SEP IRA. And I took full distribution of it once we hit the third phase of the currency life cycle trend. Then I no longer felt comfortable in there. So I took a full distribution, paid my taxes, at that time paid my penalties, and I converted all of my retirement funds into gold numismatic collectible coins.
I like it. Now, let
Yep.
me ask you this. Do you believe, or do you think, or does your analysis show that taxes and fees on retirement funds will be higher today, or they will be higher tomorrow?
Well, how do governments generate income? That's the easy one. Through taxes and fees. So all we have to do is look at Illinois.
Exactly.
Look at Chicago, because you've got many layers of taxes and fees. So I felt that that was my cheapest taxable event. Not only that, but the government is looking at those trillions that are in those private retirement plans.
Yep.
And if you read the documents, it's not fair that these people over here couldn't save for retirement, but look at these people over here who have all this money in retirement. So they've talked about one-off fees. In other words, if they only do it once, you don't change your habits. They have that discussion in there. And at the time that I read that was like 11.6%. So certainly more than the 10% penalty that I paid.
Right.
But you're never going to get away from taxes, and whatever is left in the system, because there's no liquidity on the other side of it, that's where it's going to sit. So even if they still give you this pretty statement that says you've got, 20,000 or 5 million, or it doesn't matter, whatever that number is, number one, it has no value because the currency has no value, right? People put value in dollars. They have no value until you convert them into something. A loaf of bread or a piece of gold. Once you convert them, then that value is fixed. With the loaf of bread, you're going to eat it up, right? That's your principal, that's your income. But with gold, you're going to hold it until you need it. You see?
Exactly.
And the other part of that, which I find really interesting, is, I get a lot of feedback. Well, you're the only ones talking about numismatic collectible coins. Well, frankly, my whole life I've talked about things way before other people have talked about them. So that's not really unusual for me, because I know the level of research and digging that I do. And I know that I went back and I just did it again. I just have to finish it. It's in edit mode. I just need 1 second to finish it though. But I study the laws that are on the books related to it. And people go, no, they would never confiscate here. Well, excuse me, there are lots and lots of names for confiscation.
Right.
Taxation,
right.
Inflation, market management, nationalization. Those are all forms of confiscation. So they've been confiscating the value of our labor and our wealth our entire lives, unless you were born before 1913.
Right.
I'm sorry, but I do not think they're going to stop right at the last hour and go, oh no, you get to keep your wealth.
Right. That's been my argument for a long time, is that, we were talking about cryptocurrencies and people see that as this saving grace. Since when? It's not realistic. It's not realistic. But I wanted to hear you say that taxes and fees on retirement funds are going to be higher tomorrow, because as we know, that's always the case. And that's been my argument to people for a long time, to move. And I'm not a financial advisor, and this is not financial advice, but what I did, like you, in 2009, I converted my 401k into hard assets. Yep. I've recovered all the fees, all the taxes, everything. And I encourage people every day to do that, to look at it, because you're always going to pay more taxes. You're always going to pay higher fees. Always. And until you get out of their system, you're going to continue to support their system. That system that enslaves us right now.
We vote with our pocketbooks.
Exactly.
That's how we vote. So as long as you continue in there, then you're telling them they got the green light.
It's all
And
good. It's all good.
right. And let me kind of add to what you said. It isn't just the visible taxes that we see or the visible penalties that we see, that by design, if you read their documentation, I encourage everybody to, because they're a lot more candid in there.
Yes.
But they establish these taxes and fees at a level that would discourage you from taking distribution.
Right.
Because if you look and you go, oh, I got $100,000 in there, but if I take it out, they're going to take 40% of it, and so that's only 60. Well, it's really 60,000 or whatever that taxes is. Now, if they nationalize or they freeze it, that's 100%.
Right. Or if it goes into a Myra account.
The law.
Yes. Right. In Obama, if you look at, and I've written endlessly about this, and I just wrote an article just a few days ago about it. Myra and Cyprus happened the same year. Jeremy Stein introduced the Cyprus model to the IMF, which they all said, that's beautiful. That's what we'll use going forward. All of these three events happened in the exact same year. Why? Because they have an unwritten rule that they tell you what they're going to do to you before they do it to you. Do we know when they're going to unleash this beast? I have no clue. I just know that they have they have these three major components in place right now in order to do this to the people that are not paying attention, and they're going to wake up one morning unannounced, unknown, and their 401k, their IRA, their pension, it's all going to be conveniently converted for them, for their safety, for their protection, into a Myra account. And
well, isn't that what they did in Greece?
That's exactly
they said,
what
oh no, these stock markets are way too volatile. Government bonds are so safe.
Right.
And then in 2012, which somehow was not declared a default, but they reset them twice, so they lost 90% of their principal.
Right.
Let alone all of the devaluation. And I don't know if you've seen this or not, but I'm happy to send this to you. Right after Cyprus, so they were testing the system and they were seeing where they were going to get pushback.
Right.
And the first thing that they announced was that they were going to bail everything in, and then the whole world went, but what about insurance? What about deposit insurance? And so they backed off of the deposit insurance, though those people only recently had access to those accounts again. And they did that, a long time ago.
Right.
But the Bank for International Settlements, and you're spot on correct, they do tell you what they're going to do.
Yes.
It's just that nobody reads it. So the Bank for International Settlements issued this beautiful outline of how they would convert your money held in the system into shares of stock in the failing institution. And that kind of ties the bail-ins with the collectible coins for me, because now nobody else is saying this either, okay? But thinking about this, analyzing it, understanding the laws, I personally believe that those eminent domain laws give a level of protection. And that's what enables, Reg D and the eminent domain laws enable the bail-in, because, hey, they're giving you a share of stock. So they're taking your money, but they're giving you a share of stock that has no market value. And guess who gets to say how much this share of stock is worth when they give it to you, right?
Right.
So that's what covers their ability to do that. And I think that that's one of the big reasons in that law. I can't prove this, but I believe that that law partially was put in place to enable the guys at the top that understand this stuff. With those collectible coins, they'd have to, with a monetary goal, with the bullion, well, they control the spot market, so they can make it whatever they want and then confiscate it. But with the coins, they'd have to look at each individual coin. And that's less than 1% of the market. They're not going to do that. Plus somebody that paid $1 million or $8 million for 1 ounce of gold is not turning it in for a few bucks, for $4,000 or whatever they'd offer you for it.
Right.
Okay. So I like to be in the category of the guys that write the laws, and Ron Paul only does numismatics. And, you know, I've had a few people say, well, I don't believe that. Well, I've got 2 audios and videos of him saying that. One a few years ago, and then the other one the beginning of this year when he spoke before Arizona legislature. So, you know, who knows more about the Federal Reserve and our monetary system that was part of our government forever and ever and ever than Ron Paul? And I 100% agree with him in that regard.
I like that. That's a great endorsement right there. Seriously. I mean, I like numismatic coins, but I've never looked at them in that particular light. And I will most certainly take another look, because that's huge. That is a huge endorsement.
Exactly. And you know, I mean, for me personally, because my uncle was a major dealer and he had a lot of gold coins. So this was in the 60s when he, you know, he showed them to me. Well, he was showing them to my parents, actually, because I was 10 at the time. You know, but he was my favorite uncle. So I actually spent quite a bit of time with him, and he taught me a lot of things about the tangible market. But when he opened up those safes and he told my parents, if something happens to me, Aunt Bertie will be well taken care of the rest of her life because of these gold coins. Well, in 1965, in 1964, the 60s, it was illegal to own more than 5 ounces of gold. But yet he legally was holding all of that gold because he stayed within the legal letter of the law. And that's what the collectibles do. So some people may disagree because there's a small premium on there. But right now, thanks to all the market manipulation, I've personally never seen these premiums that low. Our wholesalers are saying the same thing. They're the biggest freaking bargain on the planet. And quite possibly, I mean, I don't know if they're going to do an overt confiscation, but quite possibly and probably, and when you look at who owns them, that's the kind of gold you're going to be able to use through this trend cycle. And that's what I personally want, because that's how I develop my retirement.
Man, I'm just sorry I haven't spoken with you sooner, Lynette. Oh, I could carry this conversation the rest of the day, but I know you're busy. I've got things on my desk as well. And I think that's a great spot to end this conversation. And we will, with your permission, we'll do it again in the not too distant future, and we'll just pick it up right there. This
has been a lot of fun, Rory. I've really enjoyed it. So yes, absolutely.
And we've been speaking with Lynette Zang, and she is the Chief Market Analyst over at ITM Trading. You can find Lynette and all of her great work at itmtrading.com. Lynette, thank you once again for all your time. Certainly appreciate it. Can I share
our number?
Absolutely.
Yeah, so we have a wonderful YouTube channel as well where I do, every week, well, actually at least 2 times a week and frequently 3 times a week. So we're always updating it to keep you in the know. I try and keep them about 5 minutes. I'm not always successful, but they're not very long at all. So, but also give us a call at 888-696-4653. We're here to be of service, all of us.
Yes. Thank you. Thank you, Lynette. And we will talk with you soon.
I hope so. You take care.
You too.